Sandeep Monteiro, Head of Finance, London Stock Exchange, London, England, as the resource person who will help us in understanding portfolio risk analysis during the present scenario. For day 2, the resource person is CMA Milind Date, proprietor Milind Date and Company, Pune, India, and the topic is Integrated Reporting, New Vistas of Stakeholder Communication. Good afternoon, respected resource persons, respected Principal Dr. S. Anil Kumar sir, dear colleagues, and dear participants. I feel proud to mention that we have got an excellent response participation from almost all the states of India. We have participants from Kerala, Haryana, Assam, Tamil Nadu, Maharashtra, Gujarat, Odisha, Madhya Pradesh, Punjab, Pondicherry, Himachal Pradesh, Telangana, Ranchi, Jharkhand, Chhattisgarh, Jammu, Kashmir, and of course, Karnataka. Also from outside India, from UK, USA Island, Yemen, we have participants. Altogether, we have received 537 registrations for the webinar. Ladies and gentlemen, financial planners say that the year 2020 was the ultimate playbook of investment lessons. You could write a whole book about it. If the investment opportunities and challenges have to be deliberated in the Indian scenario, our biggest opportunity and challenges are the same. Huge population of India. While the Indian investors, with their huge number, can drive the Indian markets to glory, yet the huge population of the country is cumbersome for any program to be inclusive. But how does that all these mean to all of us as investors? I'm sure all of us are worried as to where are we heading these days, especially with uncertain income, savings, and investments. Well, to address all these investment concerns, we have CA Sandeep Monteiro with us today. Dear participants, we shall begin the program with an auspicious Sanskrit shloka recitation by Professor Ram Mishra, Head Sanskrit Department, SSMRV College. Ram Mishra sir, over to you.
Thank you, madam. Sharada Sharadamboja Vadana Vadanambuje Sarvada Sarvadasmakam Sannidin Kriyat Ayaste Vipulak Kachit Kachid Alpataro Vyayaha Apatreshu Nate Kachit Kosho Gachati Raghava. This is a shloka from the Ramayana. When Sri Rama leaves to the forest, followed by his wife Sita Mata and brother Lakshmana, his brother Bharata meets Lord Rama at Chitrakuta forest and informs about the death of their father King Dasharatha. He begs him to return to Ayodhya. Lord Rama refuses and Bharata returns dejected, but carries Rama's sandals to be placed on the throne. During the conversation, Lord Rama asks questions to Bharata about the financial conditions of Ayodhya. O Bharata, I trust your revenues are abundant and expenditure much less. I trust you do not give away your treasure to undeserving persons. This sums up the relevance of the two-day international seminar on financial investments. Thank you.
Thank you, Mishra sir, for that very relevant shloka. May now invite Professor Gokul C., Event Coordinator, Assistant Professor, Department of Commerce, to welcome the virtual gathering. Gokul sir, over to you.
Thank you, Shalini ma'am. Am I audible?
Yes, sir.
Thank you. Good afternoon, everyone. Welcome you all to this two-day international webinar on financial investments, growth and opportunities, and investors and companies' perspective, organized by the Department of Commerce, initiated by IQAC, SSMRV College, Bangalore. Firstly, let me welcome the resource person for the day, CA Sandeep Monteiro, Head of Finance, London Stock Exchange Group, London, who has agreed to be part of this event taking time out of his busy schedule, and he'll be deliberating on the topic financial investments. He's a very good friend of mine and a former colleague. Welcome, Sandeep. Welcome once again.
Thank
Uh,
you.
Thank you. Milind sir, I think has not joined yet, but tomorrow's deliberation will be from his side. Uh, but and his top and his topic will be on integrated reporting. So in absentia, I welcome Milind Date sir as well. I would like to welcome our captain of the ship, Dr. Anil Kumar sir, who always encourages us to take up any initiative with regard to academic, extracurricular, and co-curricular activities. Sir, this event is happening only because of your initiative and the way you have shown us the way forward. Welcome you, sir.
Thank you. Thank you, Gokul.
I'd welcome Dr. M.S. Nagaraj, sir, the head of Department of Commerce and coordinator IQAC, for his untiring and undying support in making this event a reality. Thank you, sir. Thank you so much. We welcome you, sir. Nagaraj, sir.
Thank you, Gokul.
Thank you, sir. Let me welcome the organizing team who made this event possible. Uh, Dr. Shalini ma'am, Ruplata ma'am, Umesh Salma ma'am, Satish sir, Sri Hari sir. Thank you. I think a lot of efforts has
Thank you,
gone in
sir.
from all of you from the organizing committee, because of which it's a reality. Uh,
Thank you,
and
sir.
Thank you, ma'am. And let me mention once again that since Charlie ma'am has mentioned, we have gone 500 plus registrations, 575 when we stopped. In fact, so that's a large count. And the speciality of this webinar is it is along with academicians, we have corporate employees, we have entrepreneurs, we have research scholars, we have students. It's a mixed bag of people because it's such an interesting topic on financial investments that we have a mixed bag today. So that's a really proud moment for SSMRV. Welcome you all to this. And as I said, we have participation from overseas participants. We welcome all the overseas participants. Welcome everybody from different states of India, which Shali ma'am already mentioned. All of them, principals, head of departments, academicians, people from the corporate. Some of my friends from the corporate have joined. Thank you so much for taking your time and joining us. And last but not the least, my own colleagues from SSMRV College, heads of various departments, coordinators, teachers, teaching and non-teaching staff, each and everyone who has made this event a reality. Thank you once again.
Thank you, Gokul, sir. Sir, I welcome you too to the program.
Thank you, madam.
I now request Mr. M.D. Satish, Assistant Professor, Department of Commerce, Staff Secretary, SSMRV College, to introduce our principal.
It
Satish,
is.
sir?
Am I audible, man? Hello.
Yeah, yeah.
Yes, sir.
Good afternoon, one and all. It is always easy to take decisions for others, but it is very difficult to take decisions for ourselves. Good afternoon, one and all present here. It is both honor and privilege to introduce our beloved principal, Dr. S. Anil Kumar. Dr. S. Anil Kumar is the principal in SSMRV College. He has been a popular teacher among faculty and students. He has an academic experience of 35 years in the field of commerce and management, both at the UG and PG level. Dr. Kumar has more than 20 years of research experience. He is recognized guide for many universities for MPhil and PhD programs. He has produced 5 PhDs and 31 MPhils from various universities. He has been doing various UGC sponsored projects. Dr. Kumar has published articles in leading national and international conferences. To mention a few, Griffith University in Australia, Harvard University in Boston, USA, and so on. Dr. Anil Kumar has authored 17 books in the area of financial accounting, corporate accounting, marketing, entrepreneurship development, production and operation management, and GST. Dr. Kumar has been elected Academic Council member of Bangalore University and adjudicator, and member of Research Committee, Christ University, member of Tourism Committee of FKCCI Bangalore, advisory member of BBMP Roshni. He has been chairman of Board of Studies and Board of Examination of Bangalore University and other universities. The reflection of his hard work and commitment has transformed into various awards, such as Dr. Kumar has been awarded in recognition of dedicated service as a teacher conferred by His Excellency Dr. Hansraj Bharadwaj, the then Governor of Karnataka, organized by Rotary Bangalore South and Karnataka Civil Defence Corps. He has been awarded for achieving excellence in education from RSST. He has received Dr. Abdul Kalam Gold Medal Award from Global Economic Progress Research Association, New Delhi, for individual achievement and distinguished service in education and research. He has been an NCC under officer and has won the Best Cadet Award. Dr. Anil Kumar has also been awarded a DLIT by the University of Panama, US. Coming back to his key focus areas within SSMRV, his academic innovations like the 360-degree education for wellness model with five-dimensional approach, setting up of 27 activity centers are all stronghold strategies which aims to get the SSMRV college to the greater heights. The direct impact of the same was our college getting a A grade by NAC for the first time during its third accreditation cycle. It is with pride we are proud to mention that our students got many ranks and gold medals in the Bangalore University examinations. SSMRU College has recently been ranked fourth among top 5 colleges in India for best value for money in India Today MRDA survey. The list is endless, but with the due respect to time, let me contain my few words about Dr. S. Anil Kumar sir. Over to you, sir.
Thank you, Professor Satish.
Thank
Good
you, sir.
afternoon. Yeah, good afternoon. Um, on behalf of SSMRV College, RV Educational Institutions, and my own behalf, I would like to once again welcome the eminent speaker, resource person of this two-day international webinar on financial investments, growth opportunities, and investors and company perspective, organized by the Department of Commerce in association with IQAC, CA Sandeep Monteiro, and CMA Milan Date. I'm really happy to have such an eminent personality, that is CA Sandeep Monteiro, who has agreed to be the resource person for today's program and be part of this initiative by the very well-known, reputed institution, SSMRV College, run by RV Educational Institutions. So this college has about 34 years of existence, and of course, RV Educational Institution has crossed 80 years, and it was started by a freedom fighter in the year 1947. So it has its own glory, and it has its own culture, and it is serving to the society from almost 80 years. So I'm very glad that you have agreed to be part of this particular initiative, and I'm very happy that the participants will be really will be really useful. It will be I will be really gain a lot of things in the international perspective. That is the reason I think we have invited people like you who have the exposure at the international level, and at the same time tomorrow we have another eminent speaker, Mr. Milan Date, who has a lot of experience in the field of finance. So I appreciate the initiative taken by the department and the entire organizing team. Of special thanks to Mr. Gokul, who has taken interest in finding CA Sandeep Monteiro for this particular program.
Thank you, sir.
Very happy to see there are participants from other countries, that is from Ireland, Yemen, UAE, UK, etc. And also almost 24 states in India are participating in this particular program. So this shows the popularity of the resource persons and of course the institution, SSMRV College, because we have been organizing many such programs especially during this last 1 year. I think more than 50 seminars and webinars, workshops, and training programs. Many such programs have been organized. We have been organizing, and today I am very happy to see about 537 participants registered for this particular webinar. This shows the popularity of our institution. So I'm once again appreciate the efforts of all the staff members of SSMRV College and the office staff and technical people who have taken the efforts in organizing this particular program. So once again, I would like to thank or welcome Mr. Sandeep Monteiro for this particular webinar.
Thank you, sir.
Yeah. Thank you, sir, for that highlights on distribution. May now request Mrs. Rupalata, Academic Coordinator, Final Year BCom, to introduce our resource person for the day. Over to you, ma'am.
Thank you, Shalini ma'am. It's my pleasure to introduce CA Sandeep Monteiro sir for the program. Sandeep sir is currently the head of finance at London Stock Exchange Group, London. Prior to that, he was controller and head of finance at Refinitiv. He also served at Thomson Reuters in various roles such as assistant group finance manager, manager accounting policies and practices, and head of enterprise accounting. Before joining Thomson Reuters, sir worked as assistant manager at KPMG Group, India. Sir graduated with a BCom degree from Christ University in the year 2000 and with a chartered accountancy from ICAI in the year 2004. Sir's area of expertise includes financial investments, financial instruments, IFRS, US GAAP, Canadian GAAP, supply chain finance, external reporting, and other allied areas. Sir was recognized by CEO of Refinitiv as one of the top 100 people across the global organization for making an extraordinary impact during the first 100 days of formation of the company. Now, I request Sandeep sir to take over today's session. Over to you, sir.
Thank you so much. I'd like to thank Dr. Anil Kumar and Dr. Nagaraj for giving me the opportunity to be here and present to you. I also thank the organizing committee, Dr. Shalini, Mrs. Rupalata for that wonderful introduction, Mrs. Ume and Mr. Satish and Mr. Sri Hari as well, and Mr. Gokul, my dear friend, for the last, I've known Gokul for 15 years. We were colleagues in Thomson Reuters and we've been in touch since then. Thank you, Gokul, for giving me the opportunity to join in this presentation for your esteemed organization.
Thank you, Sandeep.
All right, with that, I will present my slides, if that's okay.
I have stopped sharing it, Sandeep. You can take over.
Thank you. Thank you. Thank you, Gokul.
Yeah.
Let me know if you can see my screen.
Yes, sir. Yeah.
Okay, thank you so much.
Yes.
All right, thank you. So when Gokul approached me and said, could you give us a short presentation on portfolio risk analysis in present times, that got me a bit thinking as to, is it any different to any other time? Should it be the same? Should it be any different now that we've been in the pandemic for a year or so now? And so I put together this presentation from various different sources and added my own experience, both in the corporate sector as well as my own personal learnings over the years. And I thought that would be a good presentation. And in a lot of ways, portfolio risk analysis is very personal, as opposed to there being one single formula that anyone could apply. So what you see here are certain tips, certain experiences that I will suggest apply to your own situation, and before taking it as a as the rule. It's not a rule; it's more of a guide. So, what is portfolio risk analysis? I think all of us in any sphere of life, personal or professional, analyze our situation very often. We analyze it, and in the investment especially, I think we spend a lot of time, because obviously money is a very important factor in each of our lives. And so I think most of us, if not all, spend a decent amount of time thinking about money. But what sometimes could be lacking is whether there is a discipline to it, whether we are looking at it as holistically as we should, and whether we Sorry, are you guys able to hear me?
Yes, sir. Yes, sir.
Okay.
You're audible, sir.
Okay, all right. Okay, thank you. So portfolio analysis is a disciplined process of reviewing your portfolio holdings, both individually and in aggregate, for appropriateness and to manage risk periodically. So that's the definition of portfolio analysis. And it's important to know that, because there needs to be a discipline to it, and it needs to be periodic. And then I've put a quote from Benjamin Franklin, who's one of the founding fathers of United States of America: "An investment in knowledge pays the best interest." And this is mainly to say that we need to invest time in our portfolios in order for them to get returns from that. So how do we go about doing this? So I'm going to talk about how we do this in a few different topics. We have financial goals. What does that mean? Risk and involvement appetite, portfolio planning, diversify, and review periodically. So financial goals. Now, this is an important, this is a very important key aspect of portfolio analysis. It's first of all to understand what is our goals that we have. What do we want our money to do for us? And any company would also be asking the same question. In a corporate world, capital allocation, there's a concept of capital allocation, which is very critical. And every year, a company spends an enormous amount of time figuring out where it will invest its money, where it will source the money from, and where it will invest the money for the coming year. What are its priorities? And from an individual perspective, we are also need to do that. And how do we think about that? I think one of the things that we need to think about it is, what is our survival budget? What is our monthly budget going to about 3 to 6 months? And it's very important. So there could be things like, our water bill, electricity bill, something as basic as that, mortgage repayments, normal, basic sustenance stuff. And we need to figure out how much does that cost us? How much does that mean in terms of money? And it's very important to understand and know that. And then what is our short-term goals for us that we set for ourselves? And again, we think of all of these things in the back of our minds very often. And what we need to be doing is really thinking of it in a more disciplined manner. So we have to go on a holiday, you know, abroad or local, what have you. We want to have a car, you know, there is a marriage coming up. These can be our short-term goals. And short-term goals are usually between 1 year to 5 years kind of time horizon. And then what is our long-term goal? I think property tops the list for most of us. How does our retirement look like? Children's education. These are some of the key things. And again, this is very personal. Remember that I said this is very personal. And so each of us need to think through what are our short-term goals and what are our long-term goals. And it's very important to think through them and sometimes ink them down, basically. The next thing that is important in a portfolio analysis is what is our risk appetite and what does that mean? And this can again be different for different people. Some people are inherently risk takers with their investments. Some people are inherently conservative in their approach to investments. And the right formula is somewhere in between. So in order to understand our risk appetite, it's very important to understand from our perspective, what is it that we can afford to lose in terms of our investments? Because investments, remember, there are different types of investments. There are risky investments, and I'll cover that in a later slide. And there are investments which are no risk investments. And so in order to, you would have heard this terminology, higher the risk, higher the returns. And that is very true in the world. And therefore, and the assumption that most of us would like to see some good returns from our investments, we do need to take risks. But in taking that risk, we need to be very careful in determining what is it that we can actually risk, what can we afford to lose. And it goes back to our financial goals in some sense. In some sense, you cannot risk to lose your survival budget. And that's very important to remember. Your survival budget is very, very important to keep as low risk as possible. What is your investment horizon? We need to understand whether we are investing for, again, in the context of financial goals, are we investing from the perspective of what we need for our survival? Are we investing for something long-term, for something short-term, and so on? So that would help us figure out what is our risk appetite. And then there is also a concept of involvement appetite. For some of us, we put our money in banks and forget about it. It's almost passive. For some of us, we would like to invest in the share market, watch the shares rise, go down, go up. And some of it is also by how much knowledge we have of the markets and how much knowledge we have of the investments. So very personal again. So we need to determine what our involvement appetite is and what our risk appetite is. It's very important. And where is all this going? All of these aspects pretty much go to the basic principle that we need to know where we stand in terms of our money, how much we spend, and how much we want to invest, and what is it that we want from life, and what do we want our money to do for us. And there's a very English proverb, cut your coat according to your cloth. In Kannada, there is a saying, hasike dastu kalu chachu. And we would have heard that over the years. And that is so important in a money context that we need to apply. So what shape does this take? And I want to spend a little bit more time on this slide, because I think this is kind of the key slide for this entire session. So it's kind of four-dimensional based on whatever, the previous slides, and this slide kind of brings it all together. So on the left-hand side, you will see its financial goals. So what is our survival budget goal? What is it our short-term goal? What is our long-term goal? Across the top is risk appetite. Are we low risk? Is it medium risk or high risk? On the right-hand side, it's an involvement appetite. Is it active or passive? And then on the bottom, what I call is a skill or knowledge gap, which is basically to say whether you would invest on your own, you would do the research yourself and do it, or would you take some professional help? In India, I mean, I haven't been in India I haven't invested in India in any big shape or form for the last decade or so. So I may be a little behind the curve in terms of what is happening in India. But in UK and in other European countries, the concept of professional advice or professional help for finance is a very big concept. And people do take them very regularly. People are encouraged to take professional help very often, so that people are investing in things that are suitable for them. They are not gambling away their savings and gambling away their investments. So I would like to talk about it, but in India, you would want to apply that to your own situation and think through whether there is opportunity and availability of professional advice. And when I say professional advice, I don't mean people who are trying to sell you insurance products or credit cards or bank accounts or what have you. These are people who are professionally providing financial advice and help. So with the survival budget, what I have learned in my life is we need to keep it low risk. There is no opportunity, or keeping it in medium or high risk for something that I really need in the next 3 to 6 months, or from now to 3 to 6 months horizon, is something that I need to have in liquid form and something that I can convert very quickly. So to me, a cash and bank account is a good way. So in my bank account, I need to have at least enough money that will last me for my immediate needs for 3 to 6 months. And that is very important. Term life insurance. Now, this is, again, a concept that was not very popular in India a few years ago. Maybe it's different these days. In India, we are more used to things like LIC policies, endowment policies, unit-linked policies. These are policies wherein we pay premium for a period of time. Some of these policies have a exposure to the market. They go up or down. Some of these policies are not exposed to the market. We receive bonus or profit sharing or what have you from companies like LIC. And at the end of the term, we receive the money back. So it's a form of investment. Or of course, if unfortunately, there is a accident or whatever, then our family gets the money sooner. But term life insurance is more popular in the international context. This is where you pay very, very little comparatively to a endowment traditional policy. You pay very, very little in premium, but your cover is very, very large. So for something like you would pay, let's say, 12,000 rupees in a year as annual premium.
Do you mind?
Sorry, Gokul. Go ahead, Gokul.
Sandeep, would you mind making your presentation full screen? Because
sure. Sorry.
Yeah. Would you mind making your presentation full screen?
Yes, I heard that. So, is this better?
Yeah. Okay. Thank you.
My apologies.
Let the participants. Yeah, no problem. Thank you.
Okay. Sorry, so I'll just, for people who didn't see it. So on the left-hand side, I have financial goals. On the top, I have risk appetite. On the right-hand side, involvement appetite and skill knowledge gap. So I was talking about term life insurance. It's a more popular in UK and in Europe, where you pay very little premium. I was saying, give you an example. Something like you pay 12. I'm talking about a policy. Again, the pricing may differ, but for something like 12,000 rupees a year, one could get a cover that covers about 10 lakhs or 15 lakhs, again, depending on individual situation. But the downside of a term life insurance is there is nothing at the end of it. So you could pay the same premium for 25 years. And, if one survives the 25 years, there is nothing at the end of it. But what it is it's a big insurance for our families should something happen. Now that comes from a very personal experience for me, where I lost my father when I was 12 years old. And then we had to go through a significant financial hardship for several years after that. And that is one of the lessons I learned, that is something like a life insurance and a term life insurance is very important for each of us to have in our portfolios. It's not an investment, but it is a cover for our families should something untoward happen to us. And so I would encourage you to look into it if you do not already have it. So survival budget, one is cash and bank, which you need to actively manage. Some might say not so much, but you stand to gain by looking at your FD rates, what benefits a bank account is giving you, and so on and so forth. Which bank you're investing in is very important. And from another aspect of it is term life insurance, which will be useful to have for a survival budget concept. Then moving on to short term. So this is, we remember, where if I go back to the short term goals, excuse me. So holidays, cars, renovations, marriage, something that is coming up in the next 1 to 5 year horizon. And if you have goals such as that, then your low risk could take the form of fixed deposits. You take a 1 year, 2 year, 3 year fixed deposits, what have you. You could take, if you want to take a little bit more risk, and there is opportunity. If you think of a longer horizon, you can afford to take a little bit of a risk with your investments. So you could have a mutual fund, which is debt oriented or hybrid. By hybrid mutual funds, for those of us who don't deal with mutual funds, are mutual funds which invest in both equity and debt. And gold, of course, which is a very big investment factor in the Indian context. Is very much less so in UK and Europe for whatever reasons, but it's a very big investment factor, as everyone knows, in India. So you could invest in those type of investments. And those need to be slightly actively managed. Your fixed deposits, again, interest rates, what is it for 1 year, 2 years? Some banks give you better rates for keeping it for 1 year, and so on. Mutual funds needs a little bit of active management to figure out, where it is going, where you're starting off with, and so on. Gold can be passive, usually is passive, but if you're so disposed, you could be watching the gold prices a little bit more closely. And then from a passive, I think NSEs, I think they still exist. Apologies if they don't, but growing up, NSEs were a big part of our investment portfolio, wherein you put in the money after 5 years. Those days we used to get double the amount. For some of on this call might remember, but these days you don't get as much, but it's still a very safe investment, government backed. And I would also say term life insurance is also a good short-term insurance, not an investment, but really a cover for the short term. And you can think about a larger amount if there is anything in the horizon that you think you need cover for. And then long term, low risk take the form of PPF, and these are all examples. Sorry, I wanted to call it out. These are all examples, and there may be other things, but you could plot your specific investments in here, whatever you're comfortable with. But to my mind, there was PPF, there was Endowment life insurance. These are life insurance, which I was saying you pay a premium for a while, and then at the end of it, you actually get back some money. And added to that, you also get life insurance cover, but it's pretty low risk. Medium risk would be property. And some might say property is high risk. I think it's more medium risk because generally, in the long term, the property prices usually go up. So you're generally in safe hands with property. You can have unit-linked life insurance. These are life insurance policies that are exposed to the market in a limited way, but also give life cover. You could invest in safe equity in mutual funds. So these are mutual funds that invest in blue chip companies. Generally you have some bit of cover there. It's medium risk, but it's fine. Index funds is another one, which again, was not a very big concept in India growing up, but is in the UK, where you just invest in an index. You invest in the BSE Sensex index. You can invest in a gold index, and all it does is it moves in line with the underlying index. And generally, if anybody has looked at the BSE Sensex trajectory since 1997, they will see that it has constantly been increasing. There may have been minimal dips in between, but it's generally on an increasing on a growth trajectory. And so an index fund is a good passive investment that you could have. Then obviously for a long term, I would strongly encourage looking at certain high risk investments because it's a longer term horizon. And as I was saying, in a longer term, the dips tend to even out and you generally see a good growth rate with your investments. So you could look at equities if you're comfortable. You could look at equity mutual funds, slightly more riskier equity mutual funds, or you could look for, for those of us who are business minded, you could look for a private investment into a businesses even. And on the passive side, you can do index funds as well. And really the self-driven versus professional advice is lower the risk. I think we can decide for ourselves what we want to invest in, taking up a bank account, term life insurance. It requires basic research that any of us is able to do, especially these days with the availability of online resources. So you could do that. But as you go towards higher risk, one may want to consider whether they need professional advice to do it. So that's what this is. Sorry, second. So again, I want to call out that this is example only, but I would say it's important for you to be aware of. So again, this is a good slide that brings it all together. We need to be aware of our financial goals. We need to be aware of our risk appetite. We want to know about our own knowledge and comfort in order to determine whether we want to take up an active investment, whether we want to do it passive, whether we'll do it ourselves by researching ourselves, or whether we'll take professional advice. So if I could then make, this is again a very, very big, very important aspect of investing and portfolio management. And again, this was a very another hard lesson that I learned in my life, wherein my mother had invested everything, all her savings and fixed deposits and what have you, in one single bank. And one fine day, RBI stopped operations of the bank. And it was just by divine providence that the same month I cleared my CA. So we were fine from a money flow perspective. But if that hadn't happened, things could have been really dire for us. And that basically taught me a very important lesson to never to keep all my eggs in one basket, all our investments in one place, one type of investment. So what does diversification mean? So in terms of bank accounts, it's having accounts in at least 2 or 3 different banks rather than all in one bank. And some may say, oh, this is normal. But as I said, my own experience was, and some other of my mother's colleagues and friends are also in the similar bucket where they put all their savings into this one bank because it was providing some better interest rate or what have you, but it was such a risk to take. So I would say, consider having 2 or 3 different banks for your bank accounts. Spread your money. And this is no different. I mean, I remember as a kid when we used to go on trips, my mother would actually, we used to carry cash. These were the days before the credit cards and stuff like that. And we would go on trip. My mother would give a few hundred notes to me, a few hundred notes to my sister. She would carry some of the rest of the cash so that, it's spread across our luggage. So that even if we lose one luggage, we still have money, some other luggage to manage, basically. And that's no different. This concept is no different. You're just spreading your money in different places so that you're not exposed to any one specific risk. Equities and mutual funds, it would mean if you're investing in mutual funds, make sure investments spread between large cap, middle cap, and small cap mutual funds, not everything in one. Or thematic, by which I mean you could spread your investments between ESG, environmental and social governance type funds, banking funds, pharma funds, tech funds or tech equities. That's the way you will diversify. In terms of government-backed, again, you can have, you have a PPF, you have post office savings, you have NPS, NSC. So all this means is you need to spread your money into different parts, and that has a very big bearing, not only in terms of safety of those investments, but also the returns that you get will be different. You're not exposed to anything singularly in terms of your money. And that's a very important. And I just put this proverb here: don't put all your eggs in one basket. And it was interesting to find out that it was a 17th century proverb. So all of us know this. This is nothing new. This has been there for centuries now. And so we just need to apply it to our investments. Then review periodically. This is something that we probably do, but may not be as disciplined. As I was saying, discipline is very important in this aspect. So our survival budget, we need to do it monthly. You time it with your monthly salary or what have you, just to make sure you have enough liquid investments that will help you tide through 3 to 6 months. Short term, I would say once in 6 months is probably best, and long term is annually. Just review. So in the present times, how do I do portfolio analysis in the present times? If we followed all these principles, in my view, again, for my own experience, I don't think I need to be worried too much about my portfolio of investments. I don't need to be worried about dips in the market, pandemic, depression, bear market, or whatever. It is a more of a consistent. It's a consistent approach rather than a knee-jerk reaction approach, which is very important in investments. And all companies that I have worked for so far actually do this. They are not responding in a knee-jerk fashion to any of the changes in the market. They take their time, they study the market, then they make their move. And we need to be doing that individually as well. I think as individuals, we are more susceptible to knee-jerk reactions, which we should avoid. So then finally, I pulled these quotes from famous investors and leaders and so on. They basically struck home for me in how I look at in my investments and how I've known companies to look at their investments. So the first one is, close the doors, be fearful when others are greedy. Be greedy when others are fearful. So this is Warren Buffett, who some of you might know is an investment guru who has made a lot of money in the market. And his theory was, one should be careful of how one treats the share market, because when it's bullish, when things are going really well, people tend to invest a lot of money. But what people forget in the process is they're actually buying investments at a higher price than what they actually may be worth. And so that's very important to be careful. And when it's going down, people pull out their money very quickly, and then they lose the opportunity. Whereas when things are bad in the market is when probably somebody should look at investing in the market. This is the next one, which I basically said, an individual investor should act consistently as an investor, not a speculator. So investments are not a gamble. Investments are serious business, and we need to be very methodical and very deliberate in our approach. And the third one is also very important. It doesn't matter how bad a crisis gets. Any sound investment. So if we have done our research, if we have invested according to our risk appetite, our goals that we have, and we have taken the right advice if needed, or we have done the right research, it will pay off eventually. You don't need to panic or anything in terms when there's a short-term crisis such as a pandemic. And hopefully it is short-term. I know nobody's seen the future, but hopefully it's a blip in a horizon of 10 years. The next one, I found it interesting. Investing should be more like watching paint dry or watching grass grow, which means you're not actually watching it closely. It just means you invest it in the right place, and then you let it grow at its own pace. It says if you want excitement, take $800 and go to Las Vegas. So that's what excitement means versus investing. The stock market is filled with individuals who know the price of everything but the value of nothing. So this is again going back to what I said, that in a bull market, when you invest in a bull market, you're probably paying far too much for anything that you're investing in than the actual underlying value of it. So it's important to know what the value is, not the price. And all that glitters is not gold. Couple of examples I have is when I even these days when I come to India, we have these people sitting in banks selling mutual funds, and they basically tell you, sir, this NPO has come up, and the NPO is only 100 rupees. That value will really grow, sir, but 100 rupees you're going to get one unit for. It's really worth it. You should invest. I don't know if that rings a bell to any of you. But the fact remains that whether you invest 100 rupees per unit or whether you invest 1,000 rupees per unit is irrelevant. What is relevant is how good is that investment and what will it grow up to be in 1 year's time. Will it be 100 or will it be 50 or will it be 1,000? Even if you spent 1,000 on an investment per unit, and if that turns out to be 2,000 in a year's time, you still have doubled your money. And even if you spent 100 on per unit on an investment and it turns out to be 50 per unit in a year's time, you still lost 50%. So what is the price you pay at the start, whether it's a mutual fund or whether it's equity or whatever, is irrelevant in investing. And this is a very important in the Indian context because I hear this marketing style all the time. IPO, this is the time to go in. And then you're getting it at such a small amount of money per share, and that share value is only going to grow. What we need to be seeing is what is the underlying investment, what is the underlying company, and whether it is worth what you're buying it for. So that's very important. So I pulled together some resources here. Again, people on this call may have other resources that they are aware of that might help them. But some of these three things I use occasionally. So I've used Morningstar, Value Research, Money Control, gives you a little bit of background about equities and mutual fund if you want to do your research. It also ranks equities and ranks mutual funds according to their risk profile, return profile, and so on. Also, they're thematic, basically, whether they're ESG funds or banking funds or pharma funds and so on. And there's a lot of research material available on these websites that you can use to understand what is it that we would be, you would want to invest in. Again, going back to your financial goals, according to your financial goals, according to this particular matrix, which is very important. And then I have also added in a UK resource in here, which is a public domain resource available, moneyadviceservice.org.uk. It has been set up by the UK government. This gives you some tools, some basic pointers towards how to do budgeting, how to think about your goals, financial goals, how do you categorize things into short-term, long-term, and so on. Just a word of caution, some of the investments that may be referred to here are maybe UK specific, not India specific, but there's a lot of principle-based advice which can be applied in any country. So I would encourage you to go there and have a look. That's it from me. Gokul, Shalini, back to you.
Thank you, sir. Dear participants, now the session is open for questions. If you have any questions, you can unmute your device and please ask.
Sandeep, good morning. Rakesh here.
Hi, Rakesh.
I'm very, very proud to see seeing you giving a very fundamental principles of investment, portfolio risk, and how we manage the risk, and what sort of precautions, what sort of things we should keep in our mind to do the investment, irrespective of whether short-term, survival, or it's a long-term, whatever the type of it. I have just two questions to you, and one basically for myself, how to deal situations which is more into based on the current generations and then coming generations. The first question, which is to you, you have given a lot of fundamentals, principles, or fundamental directions which we should follow, which is nothing but very normal to do. But do you see these fundamental principles become an abnormal principle for many abnormal generations or the current generations? Or how, if it is so, or if it is yes, then how we can make them aware and use it in a daily life?
Oh, thank you, Rakesh. I think family is the first school, as they say, right? So most of these concepts, I learned a lot of it in my own home. And I think what helped me is my mother made sure when I was a reasonable age, 17, 18, she opened a bank account for me, put some money in there. And she said, you manage your money. If you have any questions, ask me, encouraging your children to get into the savings habit. I think we all use or have used piggy banks. That's a very important lesson that is learned. And in the UK, I mean, my children are studying here now, and I have a 7-year-old and a 5-year-old. And already when my daughter turns 6, they are encouraged to actually have a piggy bank, put in coins, put in money, save for certain things, and then they have events in the school where you actually get in that money to use it. So they're already thinking about money. I think in India these days, again, maybe different, but growing up it was not a common practice. So I think the usage of money and respect for money needs to be instilled very soon in the younger generations. And it won't be abnormal, because if you think about it, some of these quotes and proverbs that I've included here have been put in place years ago, and they're still relevant. So some of this is very basic, and I don't think it will change. Perception of people towards them might change over a period of time, but certain people, as you say, Rakesh, it won't be across the board, I don't think. So I would encourage you to, in your own families, create an environment of saving, create an environment of investing, and empower children to think about it in those terms. It's not about being money-minded. It's about survival. It's about making sure that money works for each one of us.
Yep. Thank you so much.
Yeah. So
my second
another example. Sorry, Rakesh. So when again I was 17, 18 years old, my mother actually asked me to take a life insurance policy. So it's very important for everyone to have a life insurance policy. And I said, oh, I've just started working. How do I pay for this? And the life insurance policy at the time was 4,000 rupees for 1 lakh policy. I'm talking about 20, 25 years back. And I was like, but how will I pay for this? I mean, my salary is, few hundreds as a stipend from, stipend for my chartered accountancy articleship. So how do I pay for this? And she said, it's very simple. Open a recurring deposit in your bank. You need to pay 4,800 in a year's time. Put in 400 rupees from your salary every month into this recurring deposit. 12 months later, lo and behold, you have 4,800. You don't need to dip into your normal salary. You just pay off from there. And that actually I use even today for any of my normal insurance policies that I have these days. I use the same concept. There is a recurring deposit or recurring account that I open. I know how much I need in 12 months time. I need how much in 16 months time or whatever. I put in that much amount, and at the end of the period, I have it with me. And what I have done is I've saved for my needs in for the future, without really affecting my normal cash flow in a month too much.
Thank you. So there is a question from Anagha. Her question is, what are the careers that one can see in stock market?
Not the right person to be answering that question. I think, as I said, financial advice is a good career to be in. If that is something that is becoming more common in India, at least it has a lot of scope and lot of demand in the UK context, where financial advisors are looked to for advising on various different investments. So that is definitely one career that you could look at. People think about investment banks being in investment banks, which basically are not directly related to stock market, but they're investing in companies in terms of private equity and so on, where they're looking at companies, constantly researching them, figuring out where they should invest the money that they have collected from various private investors. So those are a few of the few careers that you can look at. But I'm not the right person. I'm more from a finance perspective and less from a stock market perspective. If that makes sense.
Sure.
Ms. Shalini, I have a question. Can I please?
Yeah, ma'am. Please go ahead.
Yeah. Mr. Sandeep, that was an excellent presentation. Firstly, congratulations for that. And my question for you is, in the short-term finance, you have mentioned a gold, right? And you have also mentioned the word in UK and US, gold investment is very much limited. But whereas if you take in India, we try to, take the first opportunity as gold. And more of, if you take the majority of the people, they try to invest in gold in the form of jewelry and not in any other form. So do you think gold is actually a very good investment for Indian people?
I think it is, because it diversifies your investment. I mean, I said gold because it is popular in India. And what I'm saying is, don't think about gold only as jewelry, but it's also an investment. As we know that the gold price has gone up quite significantly. And if somebody, I don't have the stats here, but if there is stats available there, somebody will see that the gold price has been growing quite a bit. My own experience, I didn't invest myself in gold, but I invested in an ETF, which is called an exchange traded fund in gold, about 15,000 rupees, I think, in year 2008. And today it's worth 50,000 rupees. The same. I didn't do anything with it. I just left it. I invested 15,000. I left it, and it's 50,000. So I'm not saying you need to invest everything in gold, but if you have gold as an additional item in your portfolio, it's always helpful. It's diversified. It's not connected to, it's not. If the share market goes down, probably gold will go up. Actually, so it is an offset to any investment that you might have in a stock market.
All right, thank you. My second question is, if you take in the long-term investment, and there are like a lot of articles, researchers, lots of coming up in identifying a broker if we wanted to invest on long-term, investments. But why so? There are no more people telling who would be the best broker. Why people are not coming up with those lists?
I have no idea, actually. So this is, again, it's different in the UK setup, where there are specific companies that study brokers, or they call them investment platforms in this country, and they come up with an analysis of which investment platform is better. All I can say is probably still evolving in India, and potentially that is why it is not so common. So unfortunately, maybe it is more about reading articles in Economic Times or Times of India or what have you to figure out what is the best. And it's also an experience based as well, right? I mean, as you go through, you will experience whether it is a good thing or a bad thing. But you're right. I think the resources available for you to identify which brokers are good or not is not up to the mark in India. I agree with that observation.
Thank you so much. Wonderful talking to you.
Thank you.
So, Sandeep, can I go to my next part of the questions?
Please.
Yeah. So, Sandeep, since the topic has been about investment opportunity and then company's perspective, so we understood the individual, and also sometimes it can be used the topic which you have shared. Individual or some of the small company can think of, but if a company perspective for a startup, how they should look at and how they should, and what all the first of three things which will come to your mind that okay, I'm going to invest in this company, or I should have these three, then I can ask for a fund. So can you please give some lights on this?
Sorry, so you are investing in a startup, or you're starting a startup? Sorry.
Starting a startup.
Starting a startup. Okay. So I think So I was part of a startup for a very brief time. Refinitiv was taken over by a private equity firm called Blackstone, which is a very big private equity firm. And what I understood from their way of addressing startup is, first of all, the market potential of the startup. What is the market potential? Has it the potential to become really kick off in the market? It's a vision based. What is the vision of the startup? I think the second thing is where you're going to spend that money. I think it's very, very critical to understand that in startup, it's all about capital allocation. So you have some sources of fund. Where will you prioritize? What will you prioritize that money spent on or invested in during the first few years of the startup? The third thing is you need to be ready for taking some losses. So how do you build in some resiliency in terms of your funds to face losses for the first few years? It's very rare for startups to be profitable in year one or even year 5. It takes a slightly longer duration. So how are you going to manage your funds over the longer period of time is very important.
Thank you so much, Sandeep.
Yeah, also, I think one has to have the humility to identify and know when it's not going to work and pull out as well and not keep at it. It's a level of humility, I will say, to identify what is happening with the startup. Okay, thank you, Rakesh.
Thank you. Thank you so much, Sandeep.
I think there are some questions here as to if I can pick actually the questions. Some of the is gold is it the right time to invest in gold? Do you invest in small cap? I invest across the board. I invest in large cap, mid cap, small cap. I think the point is that I already covered gold when the question was raised earlier. The point is that if you know of an investment for small cap and mid cap, these are actually where the growth rate comes from. These are the slightly higher risk investments, but the returns are quite high as well. So as long as you diversify enough, you can invest in anything you want, actually. As long as there's some research you've done to know that an investment has a good possibility of earning returns, you can invest. But again, how much you invest will depend on very much a personal. It's very much a personal decision, and differs from person to person. Please share your view on investment in crypto and future of crypto market. I haven't studied that market yet. It's just to my mind, to me personally, just as an investor, I think it's too high risk for me to be taking that on. Maybe one day when I think I have sufficient disposable income to speculate, I might think about cryptocurrency as a market. But again, if you want to invest a small amount in crypto market, you can. I mean, just see how the experience goes. That's what I would say. You have 1,000, 5,000, 10,000 to spare. You can invest and see how it goes. See where you land. I mean, unless you do it, you'll never learn it. Any other questions that you would want to?
Sandeep, a couple of questions in inbox, if you could take.
Is there any that you want me to take?
Yeah, just one minute. Yeah, one minute. One minute.
So I think there is a note that now that vaccine has come for the virus, will prices fall like the current trend? Again, I don't think we need to be investing in the view that what is going to happen. So one of this thing is we are focusing too much on one item. What I'm saying is if you spread your investments enough, don't really worry too much about it. You know that over a period of time, if you take again, what is gold? We need to ask the question, is gold a 1 to 5 year horizon for me or a 25 to 40 years horizon for me? If it's a 25 to 40 years of horizon, I don't need to worry about what's happened with the virus or vaccine or whatever. I will invest in gold and I will be reasonably comfortable that the gold will go up on a growth trajectory eventually. But if I'm thinking of gold as something that I want in the next 6 months or next 1 year, then I would say it's too much of a risk to take in the first place. So I would say gold is the wrong investment. You shouldn't be investing in gold if that is your horizon that you're thinking about. So we need to think about any of these items in the perspective of what is your time horizon for this investment. As I said, the shorter the term, I would focus more on low risk, on medium risk, rather than high risk. And gold is not necessarily high risk, but it can fluctuate quite a bit, as we know, in the short term. I think there's another aspect I did not cover with your investments. I think in India, this is very specific to India. It's not something that people in the UK think about, is tax savings and stuff like that. So, if you make an investment decision as part of your diversification, you can also think about investing in tax efficient investments, like ATG investments, I think they're called. I don't know if that's the term they use still, but you can have some of those in your portfolio, so you're getting some tax benefit out of it as well.
There's another question. Is too much diversification a good idea?
Good idea. That's a very good question. Actually, you would diversify too much if, one would diversify too much if one doesn't have an idea about what is it that they want. So I don't know my financial goals. I don't know what is my time horizon. I don't know what my risk appetite is. If I don't know the answer to all those questions, I would diversify as much as possible. I don't think it's a good idea, but that's what I would do, because I don't know, I have diversified enough that my risk is low. That's the way I would think about it. But I would say a very deliberate diversification is probably more beneficial than too much diversification.
Yeah. What kinds of decisions do you make while investing?
I think, as I said, I think of my investment, even though, it's more of what I'm doing normally. I do have some matrix that looks like this, but doesn't look exactly like this. This I put together to basically provide you in one slide. I have my own way of doing it in Excel, but it's very much to say that the decisions I say, what do I need in the next few months? And that is always going to be in liquid funds, something that I can get at very quickly as I need it, or my family can access it very quickly as they need it. What am I saving for the future, for retirement? I think about, it's a big thing here in UK for your retirement, that you plan for your retirement. In India, I think maybe it's changed now, but in the olden days, people would say children are my investment. I would invest in my children's education and so on and so forth. And then my children will take care of me when I'm old. In the UK, it's very much, children are not taking care of their parents. Here, that is not the culture. And I initially started out thinking it's negative, but it's not actually negative. There is a very different dynamics. We won't go into the cultural discussions here. But in the UK, it's very much that I need to look after my own retirement, not my children. And so therefore, I would invest in certain things that I can't access immediately. There's something called as lifetime investment accounts here, where you invest something and you cannot touch it until you retire. So I invest some money in it, constantly investing money in it over the years, so that when I reach the age of 60 or 65 when I retire, I have a pot of money that I can use. So those are the decisions I make. If I need money, I keep it where I can access it soon. If I don't need the money, I put it in a place where I cannot access it. NSE is a good example. You put it in NSE, you can't really take it. You have to wait for free.
Yes.
Yeah.
Can we take a few more questions, sir?
Yeah, I think there's one question that's come up. What investment is suitable for this current scenario? Again, I say the same thing. There is no investment that is suitable for any scenario. Your investment needs to be very much according to your financial goals. If your financial goals, you know your financial goals, you will invest. The scenario will change. You're not gambling. You're not speculating. You need to be consistent. This is again the pearls, the pearls of investment wisdom. What I said. What an investor needs to be is consistent, not a speculator. So if you're investing for this current scenario, you're a speculator, which you can do. People are free. Again, it depends on your own personal, but not something that I personally would recommend. With your experience, can you suggest investment in stock market with good company? Again, it's very, very specific. You just need to take your own decisions as to what you think is good. I think one of the sectors, I mean, there are a lot of sectors that are improving right now. So I think one of the sectors that is coming to the fore, and I would encourage you to do some research. I'm not suggesting this, don't take this as just as a advice to invest, but an advice to research more, and it's possibly an exciting area to look into, is the ESG area, which is basically environmental and social governance side of things. With all the countries having a climate target to meet in 2030 and 2035, some of these industries which are into the ESG area can have good potential. But research it before you invest, I would suggest, and diversify.
Pharma could be best now.
Could be. But not everything. Don't put all your money in pharma, because again, you diversify. And pharma could be you want to explore, you have some money to spare, invest, that's fine. Will gold prices rise by the end of 2021? All I can say is if I knew the answer to that, I'd probably be a millionaire now.
Okay. Fine. I think we can conclude.
Great. Thank you so much. Thank you so much for the opportunity. I really appreciate it.
Yeah.
Thank you, Sandeep.
We have now come to the end of day one program. I request Professor Umesh Selva, Academic Coordinator, First Year BCom classes, to formally conclude the program for day one.
Thank you, Shalini. Am I audible?
Yes, ma'am.
Yes. Thank you once again. I wish you all a very happy evening. If talent and hard work meet together, that results in success. Congratulations to all for today's successful event. It is fair to conclude that our today's session was a great session. Really, it was a great session, and the question and answer session was also a very active. It was splendid event, sir, both in terms of intellectual quality and also social gratification. It has been a pleasure being with all of you today, day one of the Day 2 International Webinar on Financial Investments, Growth and Opportunities. It has been an honor to be among such accomplished individuals and to be able to present my perspective before you all. I would like to express my deep respect to all the participants for taking time out of your busy schedule to attend this international webinar. We have reached the end of day one. On behalf of all, I wish to extend a hearty gratitude to our today's speaker, CA Sandeep Monteiro, for being with us. Thank you, sir. Thank you so much. We are grateful for the time and effort you took to share your thoughts and experience. The session was very informative. The discussed area was risk analysis during new present scenario and its impact, and also emphasized on how to identify risk tolerance capacity through portfolio planning matrix. And also we have gained better understanding on how investors need to monitor investments regularly. And also the area like financial goals, how we need to figure out short-term and long-term goals. Several other insights and actions on risk analysis were accomplished through this webinar. And also, you had just focused on that before action is redeemed, it is necessary to reduce the risk. That's the last conclusion after the session of question answers. I think I just thought let me give you this. Sir, definitely we will remain all the forefront of transforming approaches for the development and achieving greater financial inclusion. Thank you once again, sir, for your thoughts, and you have enlightened our minds and shown us a new path. Thank you, sir.
Thank you very much.
Thank you. Thank you.
Now it's time to propose formal vote of thanks. It's my privilege to propose vote of thanks on this event. I, on behalf of SSMRV fraternity and the entire organizing team, would like to thank each and every member and our participants, without whom this event would not have been possible. Thank you. First and foremost, I would like to thank our resource person, CA Sandeep sir, who accepted our invitation and has been very cooperating since the inception of the program. Thank you, sir. Thank you once again for sharing wonderful insight on today's topic and also for reigniting our confidence. The session has been fruitful by your illuminating words. Thank you once again on behalf of all. Now, I would like to extend my heartfelt gratitude to our principal, Dr. S. Anil Kumar sir, for his enthusiastic support, always encouraging us to set a new benchmarks. Thank you, sir, for giving us this opportunity and being a part of this event. Thank you. I now thank Dr. Nagaraj, Head Department of Commerce, for the perfect logistic support and guidance he has extended to all of us at this event. Sir has been a constant support throughout the journey of this event. Thank you, sir. I thank Mr. Gokul, Assistant Professor, Department of Commerce, event organizer, for his willingness to take up this task beyond his comfort zone. Mr. Gokul, kindly accept our sincere thanks for the excellent support provided by you and your staff in organizing and hosting this program. Thank you, Gokul.
Thank you so
And
much.
your team. I thank your team. I would like to thank the entire organizing team for their involvement and continuous support. Last but not least, I thank all the participants who have attended the session and made this event a grand success. The response was amazing, as mentioned in the beginning. Thank for the being a wonderful participants and for your active participation as well. Thank you one and all for making this session a grand success. Thank you. Thank you once again for giving me this opportunity to say a few words and my perspective on this behalf. Thank you. Over to
Thank you.
Shalini.
Well done. Well done.
Over
Thank
to
you.
Dr. Shalini.
Yeah.
Over.
Yeah. Thank you, Salma ma'am. A few of you are asking for feedback link. I have already mentioned in the beginning of the program, it will be posted in the WhatsApp group, which is created for the webinar purpose. You may fill that. And tomorrow also the feedback link will be sent to the same group. If you are not in the group, then it would reach your email ID. Thank you one and all. We shall meet again tomorrow sharp at 3 o'clock. I request the participants to kindly join 5-10 minutes early so that we can begin the program sharp at 3 o'clock. Thank you all.
Thank you.
Thank you. Well done, Gokul. Nice.
Thank you, sir. Thank you. Thank you for
Well
all
done,
the team.
Shalini
Thank you.
and entire team.
Thank you, sir.
Thank you, sir. Thank you.